We've just seen a massive uptick in the HIMS stock this week. And while some people are calling it just a bounce, they're missing what's really happening. This was not random buying. This was the market reacting to a powerful shift in the strategy moving forward. HIMS just made the most in-demand weight loss category in the world feel like a $58 per month decision. This changes massively because I'm about to walk you through exactly why HIMS has just surged, what the Klarna partnership actually means and how the math works behind the $58 number I'm speaking about, and why this move could materially impact conversion rates, revenue growth, and the broader bull versus bear debate. We'll go through this step by step, looking at the real numbers and the logic behind all of this, so you can decide for yourself by the end of this video whether this was just a bounce or the start of something bigger.
Welcome to the game, it's the instant starts by Mikhail Kuhar.
And if you're new to the channel, my name is Mikhail. I'm a partner at X10 Day Trading. I've been working together with the team for 4 years because my highest value in life is freedom. And it's why I've been able to live remotely for the last 8 years. I've been working with businesses, 7-figure, 8-figure entrepreneurs over the last 8 years. One thing I saw time and time again is to experience true freedom in life, you need 2 things. You need time freedom and you need financial freedom. If you have time without the money, you're not free. If you have money without the time, you're not free. Which is why we built a done-for-you day trading service where you can have our pro traders trade for you. You can see our results here over the last few months. We expect anywhere from 5 to 15% returns every single month. And that's what we've been able to do for our clients. Some have portfolios up to 150K, $500,000 trading inside of our software. It's called AutoPilot. And we've developed over the last 4 years, investing over $1 million to give the everyday trader that edge to be able to be a professional day trader simply by switching on the software at the start of the day, let our traders do their work, and then you can see the results month after month. If you want to find out more, see the link below, jump on a call with me, I'll walk you through the entire process. But without further ado, let's get stuck into today's video. Here's the headline. HIMS has partnered with Klarna to offer buy now, pay later financing for GLP-1 weight loss treatments. The pitch being circulated is very simple, about $58 per month if you finance it. That structure is a 6-month supply paid over 24 months at 13.9% APR. Let's translate that into simple English. HIMS historically listed GLP-1 injectable plans starting at around $200 a month, $199 to be exact. 6 months at $199 per month equals $1,194. That means a customer had to pay roughly $1,194 in one transaction just to get started. The point of friction for someone to get involved in that is massive. The amount of conviction, trust, certainty that they're going to get the result and they want to sign up to a company like HIMS needs to really be up there. For a lot of people, that is the barrier. It's not the desire or the interest, it's just the upfront cost. Now, if we take that same $1,194 and finance it over 24 months at 13.9% APR, at that rate, the monthly payment lands at around $57. Over the full 24 months, that total paid would be roughly $1,376. My maths is spot on with that. That means about $182 in interest over 2 years. So it is not cheaper, it just feels cheaper. And that is the key. Consumers rarely decide based on total cost. They decide based on monthly impact. They decide on upfront cost right now. That is why if you ever price anything and you have a weekly price compared to a monthly price, you will usually see a much higher conversion rate. And I've seen this with businesses across the board over the years, people selling $5, $10, $15, $20,000 programs or products. If you can just price weekly, you create that barrier to entry a lot smaller to get people started, they get results, and they keep going. So that is why cars are leased, and that is why phones are financed. That is why subscriptions dominate almost every category. If something feels like a $1,200 decision, people hesitate. Look at the latest iPhone. I think in Australia, it was like $2,500, $3,000 Australian to buy the iPhone. But a lot of people wouldn't have paid that up front. They would have gone on with some kind of plan with their carrier. Now, the decision to get the new iPhone when you just need to pay $100 a month is a very simple decision. It's like, yes, of course, a lot of people do that. The decision to spend $3,500 right now to buy a phone is a lot more difficult. And that's where the roadblock is itself. It's a $1,200 decision to buy the GLP-1 initially, but now if you can finance it, it's just a $58 decision. So it's easier to stack that. And let's not get into personal debt because in the States, especially the numbers I'm looking at, the amount of people in personal debt is insane, but we're not going to go there today, right? This is good for the company and the company for what they're doing. That shift alone can really widen the funnel. And when I say funnel, I mean the total addressable market. You know, so many more people are open to a $58 decision than a $1,200 decision. So If we anchor this to the real company scale, in Q4, HIMS reported revenue of $617 million. That was up 28% year over year. They reported more than 2.5 million subscribers, up 13%. Management guided full year 2026 revenue between 2.7 and 2.9 billion. That is not a small startup. That is already a scaled platform. So when you operate at that level, even small changes in conversion rate can create large revenue impact. So if we look a bit of this math, imagine 100,000 qualified visitors moving through a funnel. If 1% convert, that's 1,000 new starts. If financing increases conversion to 1.3%, that's 1,300 new starts. That is 30% more customers from the same traffic. You did not need more ads. You did not need more clicks. You just removed friction. That can improve customer acquisition and cost efficiency. That can also improve payback time. That can support higher lifetime value because there's more stickiness when you can pay later. So if we speak about the bear argument directly, this is something we can't avoid. Like, the bears are really, really loud on HIMS. The first argument is this is aggressive marketing. Correct. It is. But aggressive marketing with structured economics is how consumer companies scale. The second argument is pay later introduces credit risks. Well, the nuance is many buy now, pay later structures, the financing partner carries most of the credit exposure, while the merchant benefits from higher conversion. That's the whole kickback. That's the whole reason people would side with these companies. If you were just going to hold on to the amount of risk that came with that debt, a lot more companies wouldn't take people like Klarna up on these options. So the consumer pays interest based on their credit profile and the term length. So the merchant just widens access, and then Klarna then absorbs the risk. The key question is not who holds the credit risk. The key question is whether completed checkouts increase, conversions increase. And if they do, revenue can accelerate. The third argument is this is desperation. No, desperation would be slashing prices across the board. Discounts, sales, clearances, whatever the hell you want to label it. The way they're doing this keeps list price intact while improving affordability and optics for everyone. It's a strategic move. So now we need to talk about the timing. HIMS has faced regulatory scrutiny around GLP-1s, compounded medications. There have been reports of pressure tied to federal agencies reviewing practices in the category. Made many videos on this. That creates uncertainty, and uncertainty creates heavy short positioning. So when a company demonstrates it can still drive demand and optimize conversion, that challenges this whole collapse narrative. Stocks move when narrative breaks, and on Monday, buyers stepped in fast. Whether you saw it at a plus 8%, plus 10%, or around the plus 13% peak, the reaction was clear. And I know I increased my positions quite a bit when we're at $14. Now, if we think about the psychological side of this, weight loss demand is emotional. People make decisions around events, weddings, vacations, doctor visits, moments of urgency. I'm a big believer in the years I've been practicing meditation. Quick side note, I have been to 4 100-hour silent meditation retreats in different parts of the world: Nepal, Sri Lanka, Singapore, and in Bali. And in these retreats, it's 10 days, no talking, no phone. You're on a very, very strict diet. And every single day you meditate for 10 hours a day. And in total, it's a bit over 100 hours in the 10 days, right? No eye contact. There's no nothing. You're essentially cut off from the world. The one thing I learned and took away from this, and why I speak from a psychological state people make decisions, is people never actually want the physical thing, the tangible thing. They want the feeling it gives them. Like, people don't want the Snickers bar. They want the feeling the Snickers bar gives them, the sugar spike, the dopamine hit. People don't want to go scroll their phone. They want the dopamine hit, right? People don't want $1 million just for $1 million. They want the feeling it gives them. Certainty in life, security, freedom, whatever the feeling is attached to that, right? Everything we do in life stems from a feeling, an internal desire to feel something. So next time you have a desire for something, ask yourself, what's the feeling below this? And usually if we talk about weight loss, people want to lose weight because there's a feeling attached to it. There's a worthiness, there's a value, there's an internal desire to feel something other than what they're seeing. Maybe there's a pride thing. Maybe it's an ego thing. But I'm a big believer, everything in life, we want something because we want to feel what's on the other side of it. And a lot of weight loss is tied to different events of people's life. When they hit a certain age, they have an event coming up. There's moments of urgency to make a decision. And at that moment, the biggest barrier to change is friction. Financing removes friction. And HIMS is built as a subscription platform. So once a customer starts, the relationship does not end at one purchase. These are ongoing monitoring and potential cross-sell into other care categories. The first yes matters the most. If buy now, pay later increases that first yes rate, subscriber growth can accelerate massively. And subscriber growth really feeds recurring revenue. Recurring revenue improves visibility, it improves certainty, and it supports valuation inside of the company. So if we relook at the maths on this, the upfront plan around $11.94 for the GLP-1 financed over 24 months at 14% is $58 a month. That paid around $13.76, about 182 extra first spreading payments out. Now, this is affordability psychology in action. It does not change the underlying product. It changes how the price is experienced. Minimal friction, and at scale, that can shift demand curves. So if we start to look forward, management already guided for up to $2.9 billion in 2026 revenue. If conversion lifts even modestly across a large traffic base, guidance debates begin to shift. And when a stock has meaningful short interest, even incremental positive data can really fuel a strong upside move. And this is why Monday was not random. It was a reaction to structural changes in a funnel, not hype, not rumors, a mechanical improvement in accessibility. Now, HIMS did not invent GLP-1 demand. It optimized access. And by turning the $1,200 upfront decision into a $58 a month choice, it widened that door. At scale, small hinges swing big doors. And the real question is not whether financing exists. The real question is how much this increases completed checkouts and subscriber growth over the next few quarters. So here's what I want you to start thinking about. If conversion rises even slightly across millions of potential customers, how does that change the long-term growth curve? And if the growth curve changes, does the stock deserve to trade where it was before Monday? That's the debate. And that's where the opportunity lives. The stock price right now is the same as what it was in August 2024. My question to you is HIMS the same company it was in 2024? Does it have more validity to the stock price? Does it have more certainty? Does it have more visibility in where the company is going? Does it have a larger product line? Is it expanded into more countries? Does it have a more proven product and concept and system and engine built? I am on the side of yes. And I think this price right now is setting us up for a really big upside over the next few years. As always, if you enjoy HIMS content, if you want to find out more about what's happening in the market, subscribe, comment below, let me know what you want to hear about in a video. I've got my other channel here. I'm posting up to 10 videos a day for you guys, all for free. So give us a subscribe and I'll see you in the video tomorrow.